Hello, traders. It's 8:01 a.m. Chicago time on Wednesday, the 28th of August, 2019. This is episode number 1584, 1584. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk-off sentiment across the board. The leader this morning's crude oil bucking the trend elsewhere and is popping higher, trading at $56.04 on October. Crude up $1.13 or 2%. The bonds are up 30 ticks, almost a full handle, up 0.56% on the futures price. The Bund is up 49 ticks or 0.27%. The laggard this morning is the cable. The cable's being influenced by news out of the UK that Prime Minister Boris is likely to approach the Queen to ask her to recess Parliament through October, forcing a no Brexit deal. So the currency is responding to that, down 0.72%. The DAX is off 0.5%. The Euro Stoxx off 30 basis points, 0.3%. The euro's off. Gold is off, interestingly, but only by $1.40. Gold's trading $1,550. Still much, much higher. And the overall macro trend there is to the upside. The S&P is up half a point, 2 ticks. It's been flirting with the low end of the range and is popping a little bit higher just now. It's it's probably better to characterize it as mixed to risk off sentiment this morning. That's what we're coming in with, and that's what we have to plan for. We have 25 points of range in the S&P. Let me just turn this down. We have about 25 points of range overnight. If you have not noticed, the ranges overnight have been quite dramatic versus what we've got during the day. A lot of the opportunity is showing itself overnight, which is great for those who are, to the east of the U.S. Let's move on to what's expected for today. Coming into today, really, the yield curve is in the news cycle. We are seeing a further inversion. As the inversion deepens, U.S. bond yield curve ramped up fears of recession. Asian equities ended in the red amid uncertainty over U.S.-China trade dispute. The Japanese yen rose against the dollar. Gold prices edged up as investors turned focus to safe haven assets. And oil gained after data showing a fall in U.S. crude inventories. What's ahead for today? We did not have a 7:30 Central, 8:30 Eastern release. We do have EIA crude oil stocks expecting a draw 2.112 million. Gasoline, we're expecting a draw of 388 million, 388,000. If we get Fed's Barkin speaking at 12:20, a 5-year note auction, and then Fed's daily speaking at 5:30 Eastern, and that pretty much finishes the day. There's nothing that's considered to be high impact. Of course, there's always the occasion of a tweet or two or a press conference that could shift us around. This is a news-driven market. The way the S&P, well, let's take a look at what we expected yesterday versus what we got. Here are the key scenarios from yesterday. The expectation, really, because we were gapping up, and the way that Tuesday or Monday finished, The expectation yesterday was to find a base and then push higher into 29.14, push through, struggle in the 2900, 2903, and push to 29.14. Did not happen at all. That was completely wrong. The secondary scenario is take out the overnight high and then find the sellers in the 2900, 2903 area, and then drop in and push towards 28.72, the point of control from that day. Given that it's a balanced day, it's likely to also push to 28.64 and a quarter, but that's the extent of it. What actually in scenario 3 didn't play out at all. Scenario 2, it is happens to be what played out. We pushed the high, we pushed the overnight high, we found sellers, and we started to squeeze down into the point of control. We achieved 28.72 or so, or 70, and ended up pushing right through that 64 before bouncing back up. The market moved quite quickly away from the mid and VWAP. And it was once it finished consolidating, the opportunity I saw was right in here for a short after the turn. And also yesterday morning, and I'll show you this real quick, not to confuse things, but this is my volume delta chart. As the market was trading sideways right up here, I'd just like you to observe. Let me see if I can isolate it. Nope, I cannot. But as the market was trading sideways up here, you could see that the delta, the bars, don't pay attention to these white, yellow, and orange lines. Those just break up the delta, which is represented by these candlesticks. You could see that the market was a seller as it was sitting sideways. There was a fair amount of large lot selling, which is represented by the white lines. So these are 100 lots or better on a consolidated basis, meaning we reconstruct those trades and create what actually traded. Large lots were sellers right off the open, came in, sold, and as the market pushed higher, large lots bought a little bit, but generally they sat sideways. To me, this looked very suspect, and as we started to push that the opening swing low downwards, it looked to me like there's likely to be failure, and then it finally ultimately failed with the delta pushing lower, and that was pretty much the only trade I saw set up that was nice and clean yesterday. There were others, but that was the one that kind of captured the essence of scenario 2 for a ride down into VPOC as the key target. I actually where was it? Yeah, 84 was, once it pushed through 84 and wasn't able to get back out of the range, out of this day's range, it was obvious that really we should continue to trade the sell side, and that was the right idea. Even at mid, it poked through. This didn't look very very easy to hold on to, but even at mid, it poked through by 2 points and then continued lower. The way this is set up, it's setting up a shorter term impulse down, pullback, and this looks like it is likely to take out that low, and that's what I put into the Convergent chat room. My comments on the close were, let me scroll up. ES looks weak to me, expecting to continue lower through Globex, barring a news event, likely to extend below 28.55 by the time we open tomorrow, which did not happen. We stopped at, well, no, we did. 28.53. 28.53 is the low, so this was correct. I wrote yesterday at 3 p.m. Central, 4 Eastern, likely to extend below 28.55 and a quarter by the time we open tomorrow, in my opinion, which is correct. Reason, we didn't see the continuation move on the impulse push down. So this is the big impulse down last Friday. This is the consolidation. We attempted to push up. We could not take out the 2900, which is an LVN plus an MCLVN. And then we created a secondary impulse So that's the impulse down. We have not tested this low, and I expect a test of this 34.50 to complete the move. Um, to complete the move, and I said it failed to get back above yesterday's range. So here is yesterday's range. Once it dropped in, it was not able to get back out of there. It appears to have a decent high from the morning. It has failed at 2,900. Delta has been size sellers since the open with some recovery, but no real buying drive. So there's no real buying in the Delta yesterday. Um, and so the expectation is for it to rotate down through the 28.55 low, and it did do that. And this is kind of a classic impulse pullback continuation, which is playing on this bigger impulse pullback, and I'm looking for a continuation lower. We haven't seen that yet, but we'll see what happens next. On the overnight, surprisingly, when I checked last night, it seemed to push a little bit down, but then it looked like I was completely wrong. A little pop to 28.74.50. And I checked the news feed. There wasn't very much there that might push us up. There was some action by PBOC, by the Chinese Central Bank, but nothing really dramatic. Once the Europeans opened right here, this is the European cash open. There were sellers right away, and you could see them extending down, and we got the selling that was anticipated on the open. I expected the continuation lower to occur on the reopening Globex, and it just didn't occur. So overall, the overnight inventory is mixed, right? We spent most of the overnight inventory, the overnight volume. We spent most of that above the close. So there's a slight, percentage-wise, it's probably positive somewhat. Currently, it's below, and we have mid VWAP, and where we are currently, right against yesterday's close. So as long as we hold this 28 2866 to 2868 area, I'm expecting this to rotate down and start moving towards the overnight low and give us that continuation move, putting 34.50 as a key target. Now, is there a guarantee that 34.50 will be taken out? Not in this environment. Not in this environment. Because what's happened in this environment is that we continuously push lows, impulse down, bounce up, pull back, higher low, and then just blow out the shorts. That's what we've done quite continuously. And this could be one of those situations where it just comes down here into 45, 48, and then off to the races it goes above 2,900 and then new all-time highs or whatever, although new all-time highs are probably a remote possibility here because I just, on a macro basis, I'm not sure who wants to commit given the environment that we're in and with the yield curve as it is. So that's a recap of yesterday. Let's take a look at what's expected for today based on those facts. Today, the expectation coming into this morning is a responsive. So I'm looking for an open auction responsive. I'm looking for it to come back into the 72 area. Notice also that yesterday's point of control right here is right on top of the prior day's point of control. This makes this 28, 82, 84 area really important. So as long as we stay below here, note this, as long as we stay below here in this and hold this low volume node in the 28, 82, 84 area, we're likely to push down. So I'm looking for it to be responsive, hold steady, looking for an impulse down. If it does not even impulse down from the get-go, looking for an impulse down at some point, pushing the overnight low and getting into 28, 48, 45 consolidation before it starts to move towards that 34. Where it goes from there, it's hard to say. Might put in a higher low, but if it does take out the 34, then I'm looking for 2818, 2803, and 2800 next. And that would give us the continuation move that completes the Friday impulse down, the bigger picture impulse down. Okay, so for this kind of action, I'm basically talking about 40 points of range if it starts to roll over. Okay, the secondary scenario is the opposite. It makes an attempt at the low. It starts to push lower, pushes this overnight low, finds buyers, impulses up, and then starts to work its way back to 28.82.84. On a breach of that, I expect a pullback. Expect a pullback to this area. That would be the another opportunity to get long, and then we start to push 2900 and really squeeze them shorts. 2900, and then the next area up is 2914, which I don't expect to get today. But the short squeeze right now would really hurt a lot of people. So that's the secondary scenario. I'm not expecting, notice that neither scenario expects balance today. Why? Why? How can I put a lot of weight on the fact that the market's either going to push lower and really complete Friday's move or squeeze those expecting Friday's move and push higher above 2,900? It's because this was a completely balanced day. Look at this profile, completely Gaussian here, completely normal distribution. And then yesterday created a normal distribution around the same points. So this was an accepted area over the last 2 days with a secondary distribution at the top. And once it breaks through that 82-84 area, then I'm expecting that top to get squeezed. I'm expecting everybody that participated down here, or a lot of the participants down here, to get squeezed out, which is likely to push us through 2,900 on a second test. And remember, we failed here 28.9950. 2 ticks below the 2900 century figure and the key low volume node in this region. You can see it right there. So once we push through that 82.84, we have an opportunity for 16 points at least on the upside. This is why we create the scenarios. We don't create the scenarios to create a make-believe world where we can predict the future. That's not the point. We create the scenarios so that we can hang on. We can hang on once the market does what we expect, because we have a plan on paper, kind of like drawing on a map. Once you're on the road, you just follow the line. That's what we're doing here. We can't predict traffic. We cannot predict how things will go, but this is our plan. We come in with a plan. Okay. The third scenario is open, test down, drive up, similar to scenario 2, but more of a drive. Scenario 2 may be a grind. It's Wednesday, the middle of the week. A lot can happen. Scenario 4, test up, drive lower, which would put us through to around 28.18 anyway, but much more quickly. So that's how things are shaping up. In terms of liquidity, what is the market mapping here? Remember, the key areas are what? 28.82 above, 28.84. What do we have? We have some liquidity at 28.85. Okay, but I don't see much else. I see it much heavier on the bid side, much heavier on the bid side, but where? 28.44, 28.45 area, that key target for scenario 1 is in line with the bid activity, the liquidity down below, right? Again, the software is ctbookmap.pro. You can get a trial of it. It's really good. It's my execution platform, but you get to see what's going on in the market and how long these bids have been here. So when I scroll out and I see and I look at where the history of these bids, look at it. It was here yesterday. This is yesterday's session. You could see these bids have been here a long time, couple days, right? And so here they are. These bids are likely to be here and are likely to remain here when we get down into this area. And I expect that to be an area for me to scale out of a short at ahead of 28.45. Okay, so these figures that I come up with aren't pulled out of thin air. It ties into my stock zone. This is definitely an area where I have to take action, and this shows me what areas those are. Again, 2900 stock zone plus there's an offer that's been sitting here, 2890 stock zone, an offer that's been sitting here, and so on and so forth. It doesn't get more logical than that. Good luck today. Hopefully, you're picking something up every day, not just from what I'm saying, but ideas that are born from what I'm saying, hopefully, and you're able to do something with this for the benefit of your account. Good luck today, and I'll catch you tomorrow morning. Take care.